What's up, everyone? This is Peter Neal from GSP REI, and you're listening to the Real Estate Investing On Point podcast. This podcast is designed to help both active and passive real estate investors take their real estate investing game to the next level so that you can grow a successful real estate investing business or find out what to look for when you're investing passively in a real estate investment business. Let's get right into it. All right, gentlemen, how you doing? Welcome to another episode of the Real Estate Investing On Point podcast. I'm here with Wade Carroll and Ron Lockhart. How you guys feeling today?
Pretty good. How are you?
Ron, we know you're a little tired. You've been doing a lot of driving.
Yeah, a little bit. A little tired. 20 hours in the car yesterday.
We'll preface that with everybody in case they think you sound different than usual or something like that. So
I'll try not to fall asleep.
Hopefully the conversation will keep you going. So there's a lot of stuff to talk about. We I think over the week between last week and this week, we shared a lot of different articles with each other. Some of them worth pointing out. Yeah, I think one thing that I've noticed lately is there's been some, expose type articles when it comes to real estate masterminds and communities and what would be the word, gurus and experts in the space who run these large conferences and they have these communities where and educational platforms where you pay money and you learn how to syndicate real estate deals, multifamily, and plenty of that in single family world. And you could probably find somebody in every asset class out there who, if you spend the money and go to the conference or buy the course, they'll teach you how to do whatever it is you're looking to do. And one thing I bring it up because for us, with the Real Estate Investing On Point podcast, one thing we wanted to do was not just have a podcast where the three of us get together and talk about market insight and our strategy, what we're doing, why we're doing it, tell stories from past experience and things like that. But we also wanted to build a community and try to help people as much as possible. Maybe not do it in that kind of a way, at least in the beginning, when it comes to having some course or some $30,000 your mastermind or something like that. But we did want to provide a platform, where we could meet up with investors virtually to start and see how we can help. And see what answers we can provide. And because for us and the asset class that we specialize in, with single family affordable housing, it's a challenging space. And that was one of the articles we shared this week, was the challenges in investing in affordable housing. And not only is it a challenging space, but it can be extremely lucrative, especially if you know how to navigate the space. So over the years, we've been able to refine and perfect in some way, shape, or form our strategy and dealing in, low income housing and workforce housing and all that kind of stuff. So, I think there's a place for the masterminds and the educational platforms. And I know over the years, I've, done many courses, gone to many conferences. I know plenty of investors who have, and it's helped them, get out of the 9-to-5 or, create this new, part of their life, new chapter of their life. So I wanted to open up the conversation and, see what are your guys' takes on, the real estate, guru space and masterminds and educational platforms and things like that. And maybe I'll start the question with, have you done any courses or been to any of those conferences? And, how did you, if not, how did you get into the space? And, what would your suggestions to people be and how to navigate that world? Kind of a lot of questions, but, let's talk about it. Who wants to start? Ron, Wade?
Wade, you want to start?
No, I've never taken any such courses or mastermind events.
You have never
Hard
spent
knocks.
a dime on real estate investment courses or anything. I'm sure you bought a book or two over the years or something like that. Or
No, I mean, the books I would buy would be more, general investing things, more generic, like I have a whole bunch of options trading books and stuff like that. But that's more risk management, which sometimes applies, right? But no, I'm not, I don't know. I avoid masses of people, I would say that. So, but I'm also, I don't know. I learned the hard way. Like I have to physically take a beating before I learn anything, which I've done quite a bit. A lot of beatings.
I would, and I think, not to interrupt you or cut you off,
Please.
but I'm going to try and help you out with this one. I think Wade and I come from, we're both a similar age in our early 50s. And I don't think those courses were real prevalent when we were starting out in the business. And
yeah, that's a good point.
And not to say it's something that we both would have utilized. I've always been a big reader. I mean, I was a history major in college, so my educational experience in college certainly didn't translate to the real estate world. So, I was very much like Wade. I was kind of trial and error. I mean, I definitely learned the hard way with some things. That's kind of how I've always been, though. I was always stubborn, and despite having some people giving me advice, I didn't always take that advice. I was going to do it my way, and I was going to figure out, if it was going to work or not work. So I think that was a good thing, and I think it was a bad thing at the same time, because I do think that it's important to listen to other people that have experience. As far as how that translates to, conferences, educational programs, masterminds, I think it's always important to consider the source. If that's something that you're going to utilize in your investing journey or your real estate journey or whatever it may be, make sure you're doing some research on who you're listening to. And also, I would say, don't take things at face value, because I think sometimes it's very easy to get caught up in the show and the promise. And, most of the time, even if a system works, the application of that system takes hard work. It's not usually as easy as snapping your fingers and it's going to work. There's due diligence involved. If it's a real estate program that's teaching you how to invest in single family, they can tell you how to go look for a house. They can tell you how to go get financing. They can tell you how to talk to a contractor or a builder, but you still need to vet those people. You need to vet the deals. So execution is important. Look, I think that these programs, these events can serve a purpose, because I think there are definitely things out there that give you good information. But again, you have to peel back the layers, not take it at face value, and understand what you're getting into. And again, also researching these different groups or these programs and talking to people that have been in them, and not just what you see on TV or in a marketing piece. It's seeking people out, going into forums and groups, social media groups, and trying to find people who've actually had experience utilizing these programs, these masterminds, these systems, talking to them, find out what worked, what didn't work. Did you have success? Did you not have success? And do your due diligence. I always, because I just think that taking things at face value can be a recipe for disaster.
Well, for being as tired as you are, I think that was pretty good feedback there. I'm quite impressed, because and I agree with you. I mean, I think you're Pardon the pun, but I think you're right on point. Yeah, we're going to do that a lot during this podcast, I'm sure. But I was taking some notes when you were talking there. I think, learn by doing is such a big part of not only real estate, but everything in general. And you have to take it in and kind of consume as much as you can to a point, because I think there can be over consumption of content and looking at a million different asset classes. And I'm sure for people who go to conferences and things like that, you always know that person who every time you see them, it could be every couple months or a couple, once a year or something like that, they're doing something different. They're in multifamily, then they're in single family, then they're in hotels, or then they're selling oil and gas or something like that. You know what I mean? So I think there's a part of the content space that can be that what's that next shiny object. This kind of goes back to our conversation from a couple weeks ago where we were talking about going beyond going beyond the headlines when it comes to doing market due diligence and things like that. And I think it's the same thing, same kind of concept when it comes to the courses and the masterminds and articles and books and stuff like that. Like you said, Ron, you have to take into consideration who's coming up with that kind of stuff. You know what I mean? And like, even for us, you know what I mean? Like we love single family, we love affordable housing. You know what I mean? So we're typically going to come from a place of a foundation of, here's the reasons we like it, here's the reasons we don't. And one of the things I think that's great about a community is when you listen and you're open to other people's perspectives, they might not come from that same foundation. So I think it's very helpful, in the sense to listen to them and see things from their perspective and all. Were you going to say something, Wade? It looked like you were wanting to.
I have nothing to say.
Okay.
I do want to say something though about, you kind of cued off of, learn by doing. I think it's important when people take that approach, you need to assess where you are in your life. When I was in my 20s and taking risks and learning by doing, there's a lot of risks I took back then that I wouldn't take now because I have a family, I have kids. So I think it's always important when somebody wants to take that approach and is going to take the chance, you've got to assess where you are in life and what your risk tolerance really can be. You don't want to, things can go wrong very quickly. The last thing you want to do is lose all your money. So I think it's always important when you want to take that step, you need to think long and hard about where you are and just how much you want to put on the table if you're going to take that chance.
Yeah, I completely agree with you. And I think that, putting things into practice helps. And, so learning it and then going out and doing it is, and that's the only way you can learn. For me, when I got into the industry, I was lucky enough to have, mentors and people I could ask for advice for, and, kind of any question I had, I had somebody I could go to for an answer. And not everybody's fortunate to have that. I mean, so, and it was interesting, you guys looking at this from a different perspective, but I'm sure that the courses and the masterminds of the communities have become as popular as they are because there's people who went through an experience which you guys did where they didn't have that experience. I mean, 20, 30 years ago, they didn't have the ability to go to those things. So they saw an opportunity in the space to start something like that, and to try to share their challenges and their successes, and then try to help other people to reach that. So I think there's something to be said for that. And if you can learn from other people's successes and challenges and not have to have make the same mistakes and things like that, then that's absolutely great. But sometimes, like you've both said, you have to, you're going to make mistakes, you're going to have issues. And I think that's where a lot of these articles, and I say exposés, some of them were kind of, pretty critical of the masterminds and some of these, guru types. But of course, there's going to be students who take things and run with it, and you have to make it your own. I mean, so maybe they didn't, maybe they grew too fast, or whatever it may be, especially in multifamily where the tide was very much in the favor of that industry for the last couple of years, and now things have changed. So people need to revise and stuff like that, their strategies and their underwriting or their due diligence. And I think having a community to fall back on, and having other people who are doing the same thing to ask questions to and things like that comes in handy. So the I think what's any other thoughts on that before we kind of to move on? Or
I don't think so.
Yeah, I think we
Well,
covered that.
unless Wade does.
I'm curious to hear like what Wade's take, because Wade, you've done a lot of different things over the years, from single family to hotels to notes. And when you were entering when you were transitioning from the single family world to the note world, how did you learn the business? How did you research the business? And I mean, like, was there anybody like who you could think who kind of helped you, held your hand in a sense, or was it just, were you forging, like going through the woods back behind you there, just kind of cutting trees and making your own path, or what?
Well, you haven't thought about that in a while, but makes me feel a little stupid. Actually, when I think about how it starts going down, I mean, I didn't know anything about notes when we bought our first portfolio, and we bought 79 or something like that, all in Chicago. And I didn't know anything about Chicago. I learned quickly that the reason I was able to buy those loans is because the preponderance of note buyers hate Cook County. Well, I didn't know that, so I bought them. And so that's, like I said, it's the hard way. So you figure out Cook County really quick, or you get crushed. So we're actually pretty good at Cook County, and we focus on Cook County because most people avoid it. But I mean, there's obviously a big leap to buying 70 some loans all at once. But when I think back, I think I just wasn't in the circle, or I didn't even know that such social groups existed that I could tap into. And probably had I been more aware, I would have done it maybe, or I should have done it, or maybe I'm foolish that it never even crossed my mind to do it. But yeah, you figure it out quickly. And I don't know that that's a bad thing, but obviously in hindsight, there's a million forums you can go on now with note trading, or single family home investing, or whatever. And yeah, it would be wise to speak with people that know something. But at the time of doing that, I knew real estate, so I figured, okay, I'm just buying that asset a little bit upstream for a little bit better discount. What can go wrong? I understood the asset class. I understood leverage. And, I figured I could wing it after that. So I don't know. It worked out, right? We're all here. So.
Well, I think you bring up a really good point, and I often wonder this, and I think one of the themes that's coming to my mind right now is this foundation. And I think, Ron, you had said it, because I'm really big on foundation, and I kind of have my couple rules of life that I live by, or things that I often come back to if I'm ever looking for inspiration or motivation, or kind of need some guidance or something like that. And one of those first things that I'll come back to is, what is my foundation? You know what I mean? Like, what am I good at? What am I not good at? What do I like to do? What do I not like to do? And then how do I kind of go from there? And you made a good point, Wade, where it was like your foundation was single family, and you understood that aspect, and notes was just a different angle of it. I mean, you're talking about first mortgages, not seconds,
Yeah,
right?
yeah.
So there's a
The collateral's the same, so it's
Yeah. Which I
But
think
yeah,
is
you're right.
important.
And I think you can go to these seminars and learn nuances. Like so many things I probably could have learned had I asked or had someone educated me as far as these notes go. But it's when I think foundation, like you're talking about, it's a general sense of how financing works. It's a general sense of what is expected out of collateral, and you can get accounting, just general accounting understanding. And I was fortunate to have some of these classes in college, and I understood it. And I think that lends itself to a multitude of disciplines outside of just real estate, even. Obviously, real estate is what we're discussing here, but if you have those foundations, you know how to manage your checkbook, you know how to budget, you know how to get a loan, save for a loan. You know, if you have those aspects of any kind of investing, finance, collateral, general rules, you can that's a good start. Now you can get into the nuances of how to identify, if you need a new roof or this, that, or the other, or how to get a vagrant out of your home that's taken over in Cook County, things like that. Yeah, that'd be helpful. But if you have a general understanding, your foundation you're talking about, Peter, that's the most important, right?
Yeah, well, you're peeling the onion back pretty far there, and I like that a lot. You know what I mean? Because I think one thing that sometimes frustrates me in this industry or bothers me is when people I think sometimes it could be a little bit too much when it comes to a team. You know what I mean? And you guys know me from a fundraising perspective. I want to know how to do everything. You know what I mean? Like I want to know how to do every aspect of the business, from construction to property management to acquisitions to underwriting, due diligence, accounting. I mean, I want to know everything that's going on. I want to know how the people that are really good at it, how they look at things and all that kind of stuff. Now, do I need to know every single thing for what I do on a daily basis? I mean, yes and no. I mean, do I need the minute details of every little thing? And I mean, not to the extreme of the person who's running that aspect or doing that on a daily basis. So I sometimes I see people will give the advice of, just work with people who, if you don't know due diligence, or how to underwrite a market or analyze a market, or you don't have property management, just go work with somebody who does. And I think, that doesn't work for everybody's personality. It doesn't work for my personality. I mean, I would want to know what's going on and what's that like, because how do I judge if that person really does know their stuff or not? You know what I mean? Or if they're just kind of, they act like they do, or they can talk the talk, but they don't really walk the walk, that kind of thing. So I think sometimes it frustrates me, and I could see people getting frustrated in the industry because they feel like they don't know the property management side, or they don't know the construction side. And what you're saying, Wade, is it's sometimes there's probably other deeper, if you peel the layer of the onion back more and more, you probably can find something foundationally that will help you to build, a sturdy aspect, or build from a sturdy foundation to learn those things and take them on. But also, I mean, so it's like you're looking for a balance of, leaning on your own foundation, and then, working with other people, learning from them, and then, just that kind of learn by doing and putting things into practice, and always revisiting and revising from there. So it sounds like there's kind of a balance, and which is like anything in life. Would you agree, Ron?
Well, and I
Or
think
Wade?
there's
Go for it.
the other aspect that too is that the personalities that they won't do anything until they do know everything. And I don't think that's the right. Again, if you understand your financial capabilities and the leverage you're using, if you're using any, you can assess a certain amount of risk and move forward without having to know all the intimate details or what could possibly go wrong. And maybe that's a foolish statement. Maybe I'm more of a risk taker than I should be, but
Well, no,
you
what's
you
the
spend your
analysis by paralysis by analysis, or I mean,
well,
what's that
that's right.
saying?
Paralysis of analysis.
Yeah.
It's totally true. I mean, that's like a real thing.
Yeah.
But at some point, it's not. We talk, right. There's a lot of issues we and horror stories we have all had, but um, it's really not that complicated of a business. It's messy. but it's not really that complicated. And the math is generally pretty simple.
And you mentioned something earlier when you were talking about how you might have been able to utilize some of these groups or forums, and you used the phrase nuances. There are certain things in this business, from the finance side to the construction side to the property management side, all throughout the whole process, that sometimes I think, and Wade, I was just thinking this through as you were talking. Sometimes, and it ties into what Peter was saying about Peter wanting to understand every single step of the process. I think there are days that you and I, because of our collective years of experience, we've forgotten some of the stuff we've learned. It's always there. Oh, yeah. It's in the back of your mind, and it comes up when a certain situation arises. But those are those nuances you're talking about that you truly only learn through experience. I mean, I mentioned earlier, I was a history major. Was not very good with math, never realized finance and math really aren't the same things. And about 10 years into my real estate journey, I'm structuring all my own deals and handing them to my broker, and he's getting paid on it. And I said, wait a second, I'm not going to keep doing this work and you're going to get paid. We're going to go start our own shop. And he says, wait, don't do that. Come partner with me. And I spent 3 days a week in New York doing commercial and residential real estate finance. Those are those things that you learn through doing that you don't even realize that you're learning sometimes. And if you have an app, and I do think aptitude is important, because I think certain people's brains work a certain way. And it's not to say that, everybody can't be successful in real estate investing, but I don't think everybody can be successful investing in real estate and being an operator as well, because I do think that it takes a certain aptitude. And a lot of times, and again, I'm going to go back to Wade and I with our experience. I think we learned so many different facets over the years without even realizing we were learning them. When you got into the note business, you kind of jumped in with both feet. When I got into the construction side, I jumped in with both feet, then jumped in with both feet to the investing side. And then, the finance piece of it happened, organically to one extent or another. So I think to become well-rounded in this, investing in real estate is one thing. Running a real estate investment company is a whole different story. So I think you need to kind of look at these things in two different silos. You can go to a seminar and learn how to invest in a piece of real estate, but to run a real estate investment business is a whole different animal. If that makes sense.
Yeah, and I think there's even more to that too. That if you like, it's one thing to say, okay, I want to learn how to flip houses, and well, I'll backtrack. Where I'm going with this is, I think in order to be properly successful in real estate, you have to be a chameleon. Sometimes house flipping works and sometimes it doesn't. And if you don't have something else to fall back on, you get in trouble fast. And you learn this by, watching your real estate agent on a super slim deal that you took all the risk and all the work on. And your real estate agent is, making their, whatever, they're splitting 6 points or splitting 5 or whatever. And she's making almost as much money as you are without any risk. But when that flipping market changes, now what are you doing? The situation I get in all the time with notes is I have the pressure that I need to be able to buy enough assets at this next auction or from this other vendor to stay alive for another 12 months. And then suddenly I find myself bidding myself into a situation where there is no profit. So I don't like the pressure of being forced to perform in that type of environment, because it's bad for my business. That's why we have other businesses. We have a bunch of rental units and they perform every single month. So I don't feel the pressure of having to perform with mortgages, 2 or 3 times a year. We don't flip houses all the time. We do when it makes sense. But you have to be able to. So these people that they do their own accounting, they're a real estate agent, and they're flipping homes, and they have a rental portfolio. I mean, you start insulating yourself from the market, protecting yourself, hedging yourself, and I know we're probably off the rails here, but those are the things I think about before going headlong in any one direction. Because we have seen real estate stand on its ear a number of times. And then what's the fallback plan? Well, you were there, Ron. We both had, I had 600 and some rental houses in '07. You were neck deep in construction back then, and everything came to a screeching halt.
Yep.
What happened? I had nothing. I had no fallback plan after that. So I was scrambling.
No, and one of my big takeaways from that was the amount of opportunity that presented itself post 2008.
Yes.
I wasn't in a position to really capitalize on it. And I kick myself to this day and those lessons that I learned that I always want to be prepared for the next market anomaly to be able to capitalize on. Because inevitably, when something like that happens, there is opportunity on the other side of it. And usually it's some of the best opportunity you'll ever see.
100%.
Yeah, we could probably.
Rails, Peter.
No, I think this is a great conversation, and I think a couple of things that were mentioned there. We could take a whole podcast and talk about any one of those types of things. And one thing I last week that we spoke about was the construction side of the business and working with general contractors and how to find a good GC. And there was just a bunch of different things we discussed on due diligencing a general contractor, how to find them and questions to ask and all that kind of stuff. And one thing I wanted to follow up with today was, take that to the next step. You know what I mean? So we found a good general contractor. Now what do you do? So let me pose that question. Let's have a conversation around that. And then, we'll call it a wrap, and we'll continue next week. And maybe, we'll touch back on some of the things that we're talking about now. Cause like I said, I've taken some notes, and I think that, there was a lot of really good talking points there that, we should give justice to and speak more on. So Ron, let's start with you. What so you have a good general contractor you think is good, that you trust, or so far you trust that kind of thing, and you want to work with them. What do you do?
I got to be honest with you. I think Wade might be better to kick this off because
you don't work with a GC in a long time, right?
To be honest with you, no. I can tell you how to protect yourself against GCs, but Wade, with the note side of the business, they're like we talked about on the last episode, they're interviewing people all the time. So to be honest with you, he probably has more experience with the GCs than I do.
Yeah, I think that makes sense. When I said it, actually, too, I thought Wade might have a better answer than you. Wade, let's start with you, and then maybe if we have time, we'll come back to the point you made there, Ron, with protecting yourself, or maybe we'll leave that for next time around. So, sure. Wade. You do this on a regular basis. So you've called your property managers and your agents, and you've gotten bids, and from a couple different crews. You have somebody you want to work with. Take us from there.
Yeah, it's funny. We were actually on our Anders weekly call yesterday and going through this with our attorney. We're cleaning up some stuff. So there's two roads that they'll usually happen. You've engaged a contractor, and they'll have their own contract. So they've submitted a $60,000 bid, and they'll typically have a scope of work that's tied to some kind of a contract and how they want to get paid. And depending how organized they are or how sophisticated that document is, we may or may not use it, but we always have an addendum that will slap on that same agreement that sort of tells them how we're going to do things. Just because they want to get paid this way doesn't mean we're going to pay them that way. And then in some cases, especially in more rural areas, you'll deal with a contractor that doesn't really have a contract. So we have our own. And this is where, as we were dialoguing with our attorney, I think we scared him a bit. Sometimes, I guess it depends on the dollar amount before I'm going to go through the effort with a full blown contract. Because sometimes I'll have a guy just run in and do some paint and carpet. It's $4,500. And I usually don't go through the whole contract process with that. If it's, you get up there in the 50s and 60s, we typically do. Anyway, there's reasons for that. But the first thing we always do is our legal compliance guy, he wants the GC's license. He wants proof of liability insurance. He wants proof of workman's comp. And workman's comp's a big deal because if you have a contractor and one of his guys falls off a ladder and hurts himself and he doesn't have workman's comp, his attorney is going to come after you or me. So workman's comp, I almost pay more attention to than anything else because I know my liability will cover him if he doesn't have liability. But workman's comp can be tricky. So those three things, you get his GC license, proof of liability, proof of workman's comp. And if you have that, you're from a liability perspective or managing your risk, that's a big step forward. If he doesn't have a GC license, that should be a red flag. If he doesn't have insurance, that should be another red flag. And now you're just exposing yourself. And probably you don't want to use that guy. Is that enough?
And that's certainly, I think great advice for anyone, and kind of makes it simple and to the point. Talk to us about were you just telling me you're going to add there,
I was
Ryan?
just say, I mean, the only things I would add to that are, obviously the insurance, Wade's spot on. Make sure that you're a named insured. Depending upon the state you're in, this doesn't always work, but you can have a no lien clause in your contract, which prevents the contractor from filing a mechanic's lien on the property. Sometimes they're not enforceable, but it doesn't hurt to have it in there. And then just, the structure of your contract from a payment standpoint, making sure there's always benchmarks that you're setting for the payment schedule and permitting too. That'll be the other thing.
Yeah, we do a waiver release too before we give them that last payment. Usually we split our payments up into 3 sections, but before we do the third one, we want that lien waiver executed.
Yep.
Well, so Ron, you kind of went exactly the way I was going to take it. What is it in the contract that you're looking for? What are the non-negotiables? What are the kind of things you want to see from what you want to see and then what you don't want to see? I mean, so like, what do you, if you're not seeing it, what are you putting on the addendum, that kind of thing?
I mean, Wade just pretty much nailed it all. I mean, assuming everything in the contract, you can have a great contract and you can agree to all these terms. But to be honest with you, the next piece of it is really contractors, I think, have a way of I don't want to say not sticking to their payment schedules, but they always want as much up front as they can possibly get. And I think it's a delicate balance where they have to operate. They have to order materials. You shouldn't expect them to go out in front and pay for everything. So it's setting it, and a lot of times it depends on the scope of work, what you're doing, the extent of the work, how you're going to set that up. I agree with Wade, thirds is a very good way to do it. If it's a really big project, you could certainly break it up a little bit more, but it's really about holding the contractor accountable to the schedule, because they'll take their first draw, do work, and sometimes they'll come to you and say, hey, I'm ready for the next draw. Well, you need to make sure they're actually ready for the next draw and know what you're looking at. Because the last thing you want to do is leave yourself exposed. I've seen this happen way too many times. A project will go great for the first 90% of it. It's the last 10% that can be the biggest issue. It could be a 2-month project that it takes them 90 days to do, or 30 days to do the first 90%. And it takes them another 30 days to do the last 10%. And a lot of times it comes down to bickering of money. Also, change orders, you need to have, You need to have things in your contract about change orders, make sure they're specified, that they can't just arbitrarily, at their discretion, go out and do additional work without you signing off on it. So change orders are important, especially when you're rehabbing a home that, if you tear off the roof, the sheathing's bad. Well, that wasn't included in the original price, but we had to do it anyway. You want to make sure there are provisions in there for all of that. And there are a lot of good form contracts out there that you can utilize. If you ever have any questions, go to your real estate attorney. Ask them. Attorneys usually have good contracts. If you don't have experience with it, what he was just talking about, working hand in hand with the attorney that Anders works with, in developing the contract and making sure everything's covered. So, if you don't have experience with this, if you don't have a form contract that you use, talk to an attorney.
I think we covered a pretty good ground there. It gave some good action items and good things to take into perspective next time you're structuring a contract or with a general contractor. Let's leave it there. I think it was kind of short and sweet and to the point, and we'll pick it up with getting into the protecting yourself beyond the contract and maybe some of the management, construction management and things like that. And like what you said, Ron, making sure they are ready for the next draw, that kind of thing. And so maybe we'll pick it up there, and then we could talk about red flags and things like that to look out for, and maybe tell some stories and that kind of thing. So well, I think this was a great conversation, gentlemen. I think we covered a lot of ground and hopefully provided some great value. We started off talking about the community, so I just want to give a little plug to that. If you're interested, on our website, gsprei.com, there is information, and you can request more information on the community aspect of the Real Estate Investing On Point podcast. And if you want to interact with us directly and ask questions and all that kind of stuff, that's a perfect place to do it. So we appreciate you listening to another episode of the Real Estate Investing On Point podcast from myself and Ron and Wade. We greatly appreciate you, and we'll check you on the next one. Well, there you have it. Thank you for listening to the Real Estate Investing On Point podcast. Be sure to subscribe and join us live on one of our virtual meetups. You can find more information on our website at gsprei.com. That's gsprei.com. Thank you again, and God bless. We'll look forward to catching you on the next one.